Hello, everybody. Today we're going to be doing an updated calculation here of CLOV stock. They just had their Q4 earnings, so they have their full year 2023 and their guidance for 2024. Their insurance MCR was 82.4% for Q4 on 12% revenue growth. And for the full year, they were 81.2% on the MCR with revenue growth of 14%. Their net loss improved year over year by 13.8 million in Q4 and by 126 million to 213 million for fiscal year 2023. So they did really good. They're improving and they do expect to be positive for 2024. We will see how that goes. It wasn't a high estimation, but it's still a step in the right direction because it showed proof of concept. As you can see here, they show the numbers for the financial performance. As you can see, they have a favorable trend in insurance MCR, and for the fiscal year of 2024, their guidance is going to be between 79% and 83%. So that's really good. If you come here for the full year, financial year for non-insurance, then they exited this, so they're not really expecting much. But for the financial performance consolidated, the full year revenue for 2023, as you can see, it's down, and we already knew this was going to happen because they did a lot of cuts. So if we go for full year 2024, now we're just doing insurance revenue. What they're focusing on for the full business is going to be between 1.25 and 1.30 billion. If you can compare that to this year, then we're only growing at 5% on the high end estimate if we were to hit 1.30. So if we do hit the 1.25, there's really no growth there. So we can do two calculations on the low end and then high end. So the low end, we're just going to say that we're hitting 0% revenue growth. But for insurance MCR, we already said that. This is for salaries and general expenses. And then as you can see here, they're expecting to be between 20 million profitable. Um, this is just a quick little slide update that you can see on their thing. It will show you their net loss, all the stuff for the quarter. Check it out on the investors page. But for now, we're going to go ahead and do our calculation. So we have 65, which is 5% of the estimated 1.30. And then that comes to a discount rate of 10%, 2% perpetuity, 407 outstanding shares. It comes to a discounted cash flow price of $2.11. So we give ourselves some discount rates. As you can see, it's even trading under a 40% discount right now because we're trading in the low 70s at the time of this video, which is I expected after earnings. I did say that in the Al Stocks discords that I did expect things to be lower after earnings because there still are a lot of red flags going forward. We don't know what's going to happen in 2025 when we go down in star rating. So we really have to be positive in 2024, and they're really going to have to give us some good guidance for 2025, what their plans and expectations are, and hey, are we going to be starting this sauce? So we really need to know a lot of things going forward. So I'm not surprised, but if we do have a good Q1 earnings, then I do see us going towards our potential value here. Now, like I was saying, we're going to do two calculations because we want to do the low end. So if we take 1250 and times this by 0.05, oops, you got to put the equals sign right here, then we are going to get 62.5. So 62.5, and then we'll go ahead and put 0% growth. We come to $1.42. And then with the 40% discount, we're trading at 72 cents. This is almost right around where it's trading right now. So, as you can see that. We're going to go over here to their net asset value. Currently, they have 570 million in assets, 284 million in liabilities, 487 million total shares. We come to a net asset value of 59 cents. So if we come to our final value, just calculating those two together, we would come to a value of $1.35 if we just average those two together. But we're not going to do that for a company like Clove. But as you can see, that's how it works. So as you can see here, this was for me looking at Target the other day. So if you put in Clove, it's trading at 73 cents. My buy price for Clove all the fucking time. That's how I do it. Now, anyways, let me know what you guys think about Clove. Let me know what you guys are trading at. As you can see, this is where they're currently trading at because growth is really slowing down to that 5%. And then, they're cutting out the non-insurance side of things for revenue, so that really took our revenue down. They're really focusing on profitability. So even if you see here we hit the low end estimates, we'll just keep a 5% growth rate, and then it'll be $2.03. But the 5% growth rate don't make sense if we hit low end estimates, so we do have to go back up to that 65. But let's just say we're at the 65 and we just want to calculate things based upon this and what their growth rate is going to be expected for 2025. So let's just say they are growing insurance revenue 12% and 14% like they were in 2023. So then we go ahead and we do, we'll just go ahead and take this. So 1300, 1300, and then we'll go times 0.12. So 156, right? So if we take, we'll just go 456 times 0.05. Whatever. It's not working. I messed that up. But anyways, a 156. So if we just go ahead and we take that higher and we do this for CLOV, then we're going to go ahead and get a different value because it will be up more. It'll go up. So 1300 plus 156. So 1456. 1456 times 0.05. This is so you guys can learn how to do it on your own. We get 72.80. Okay, so 72.80. And then with the growth rate expected of 12%. So now we're back to trading at like $3.94 on the high end. So that's just calculating it based upon future potential revenue aspects of it if they were to continue to grow at 12% after that. But we don't know. It's all speculation. But you can see an idea how big of a difference 12% growth rate is from 5%. And they did talk about in this latest earnings about potentially going back into growth soon because they are going to prove that they can be profitable and that their business model works. So now that they're proving that their business model works, they're warning us like, hey, in the future, we are going to be growing. And when they grow, expect a share dilution. So this is my calculation right over here, about $2.11 on the high end. And then on the low end, as you know, go ahead and put these numbers back in real quick. On the low end, we got $1.12. That's a 40% discount rate. So, hopefully we are trading over $1 soon, but we shall see what happens. Thank you.